Good morning, traders, and welcome back to the Trader Bacon Show. I'm your host, Gates Adams. It's been 2 weeks since I've seen y'all, and I sure do miss you when I miss a week. But you may notice my extra shiny forehead this week. My extra exposed forehead got a little burnt. I was on a cruise last week, and fortunately missed the hurricane because we were in the Caribbean, but I did get a little extra sun exposure and have to have a little oil on my head to keep it from peeling right off. Anyway, I am so happy and excited to be back and sharing this Monday morning with you all. First and foremost, I want to congratulate from 2 weeks ago, we had winners of the evaluations were Eva, Iswaran, and Edward. Hopefully I've pronounced those reasonably well. And I want to shoot an extra congratulations. The payouts just keep coming. Apex Trader Funding has not only passed now the $200 million payout level, but $227 million plus paid out to traders. That is money in the bank to traders just like you and me. And yes, I know sunblock is definitely important. And unfortunately, there was just a little extra exposure here up top. And well, life happens that way, unfortunately. So anyway, but we'll definitely be more careful in the future. I have an awesome show for you today. Kevin actually has been on the show before. This is where I first met him in September. And since then, he and I have not only become friends, I have actually hired him to be my trading coach. So over the last several months, he and I have been working on some structure and skills in terms of my understanding of the markets and the charts. Some of you who have been watching the show for a period of time may have seen a bit of a shift in the way that I'm actually able to converse and talk about the markets. And I got to say, I attribute a significant amount of that to my man, Kevin, here. And so what we're going to do today is we're going to share a little bit of what he and I have been talking about over the course of the last few months that has just made such a significant impact on my trading. So let's bring on today on... excuse me. Let's bring up Kevin from Bullish Bears on today's episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Kevin, almost got through that pretty clean. How's it going, my man?
That was awesome, dude. It was good. I'm doing good. How are you doing?
I am doing all right, except for a little bit of sunburn. So we'll deal with that. And as John mentioned, yes, I got to take a little bit better care of my skin. So you, on the other hand, don't have quite as much exposed skin on the forehead. You should probably be safe.
I was going to say, you got to give me some of that.
Yeah, well.
Split it 50-50.
So anyway, listen, man, I want to tell you how much I appreciate you coming back on the show. Yes, we have done this before. And for the long-termers, they may remember you from back in the day when you and I first spoke on here, but I wanted to change the dynamic up a little bit. We've got some, a lot of stuff going on this month, and this I thought would just be a fun way to, share some of the stuff that I've been working on and being exposed to over the course of the last few months and working with you, which I can't even begin to tell you how much I appreciate. It's been not only a lot of fun, but it's been fruitful and helpful, of course, as you've seen me passing some evaluations and moving forward in not just my understanding and skills, but actually in my results. At the end of the day, that's all that really matters. So, man, welcome.
Dude, thank you for making me feel welcome. That's awesome. I mean, whenever you tell me, how much better you've gotten and where you're at now versus where you were, makes me happy. I'm happy to see that. I love it.
Well, we're going to shy away from talking about this morning because I am out of practice for a week and my attitude reflected that, just my results. So, yeah, it was a little bit of a rough morning, but rough mornings happen. We know that. And that's how we, one of the things that we've got to do is be able to move on from those onto the next day, get back on the horse is definitely one of the things that we've been talking about. And real quick, we will be giving away 3 evaluations from this show as well. So make sure you fill out the form. It's in there in the chat. So don't forget to get that filled out before the end of the show so you have a shot at winning one of those, and we'll announce those on next week's episode. All right, Kevin, listen, man, you've been trading for a little while right now, haven't you?
Yeah, I'd say so.
Okay.
Been around the block.
So let's do a little refresher because I'm sure not everybody's, like, even the folks that were watching back then may not remember the conversation. Now, how long have you actually been trading now?
So I've been trading for about almost 5 years now. It's crazy saying that. It really is. Time flies.
It's definitely there's just that dynamic of, like, I can't remember my life before this, but I can remember how I got in. So what actually brought you into the world of trading?
Yeah, so as you know, we covered the first time I was on. Unfortunately, a lot of people get into trading because, they're looking for a way out of a job. They're looking for, maybe they're already in finance.
Mhm.
Fortunately for myself, I was working full time. I had a management and a pharmacy type of job. And unfortunately, I got very ill around the beginning of COVID. And
Mhm.
because of that, I wasn't able to work anymore. So
Right.
because I was stuck at home, not much to do, being the driven person that I am, I came across a trading video and I said, "This looks pretty interesting. I want to get into this."
Right.
One thing led to another, book after book. I had all this time on my hands, and I just, from sun up to sundown, I would just hit the books, hit the charts. And I got to say, I really got to thank Apex for my start and for my beginning, because Apex really gives beginner traders a chance to become profitable, a chance to try trading strategies, to test their trading with
Mhm.
the opportunity to profit without putting so much capital down.
Right. Yeah, I mean it's just such a wonderful structure. Obviously, everybody knows my feelings on Apex, and well, let's just face it, they're the reason that I'm still trading. So, uh,
Good. Good.
let's talk a little bit about what you and I have actually been working on. So at this point, we're going to go a little chart heavy on today's episode because look, we know we're not going to teach and train anybody how to trade in the course of a 30-minute show, but because Kevin and I have a bit of a background in terms of what we're going to be talking about and what we're going to be sharing today, we'll go through some analysis, we'll go through some trade review, and just take a look at some of the stuff that what one of our calls generally looks like as we're going through this process, and let's see if this hopefully brings some insight into what you guys are seeing and what you guys are experiencing in the markets as well. So let's go ahead and pull up the charts if we could. And we'll jump into that. So what we're looking at is an NQ chart. It looks like right now we are sitting on the 15-minute.
Yes.
All right. So talk to me. Well, I know what we've got here, but let's go ahead and share with the audience what we're looking at here.
Gates, you don't have to gloat now, okay?
Oh, believe me, there's no gloating in this one.
All right. So real quick, I just want to break it down. So whenever I do any type of charting, any type of analysis, and this goes to the community bullish bears that I'm part of, I always want to do what's called a top-down analysis. So I want to look at something like the daily. Rarely I'll look at the weekly. Usually the daily will give me a good enough idea of the overall trend. And seeing how strong we've been on the daily, excuse those alerts, it's sort of hard to say, okay, well, at this point, it's on Wednesday, I want to short the market. Well, Wednesday, why would you short after such a strong day on Tuesday and Monday? So it's really just an idea of following the trend, because what that's going to do is it's going to keep you out of shorting a 15-minute fair value gap, shorting a 30-minute supply zone, whatever it is you trade. If you know that higher time frame trend, it will really keep you out of a trade that will most likely not work out. We always talk about probabilities in our trading, and that higher time frame really helps seal the deal on what kind of trend and what direction we're in.
Mm-hmm. Now, obviously, when you've got back-to-back, green candles on the daily, no wicks, no nothing, you can see the strength in that movement. But when you start to see a little bit of that back and forth, how do you interpret that in terms of your daily bias?
So like a range.
Mm-hmm.
So if we were looking at a range, what I would do is I would simply go to a lower time frame. So let's say we were looking at this area right here. Could sort of mark this range out, and we come down to a lower time frame, because what you're going to see is the lower time frame is going to resemble a bit of what the higher time frame looks like, right? We're going to get more of a trend on a lower time frame because we're in a higher time frame range. So now that we see our range, we could see potential demand zones forming. It looks like we had one right here that worked once, twice, 3 times before it did finally break, and then we had another demand zone right under it. So a lot of times when we have ranges, supply and demand works out well, because supply and demand is what gives us those set ranges. If we don't have a supply zone to way up here, there's a good chance we are going to find our way back up there within price, if the overall trend right previously has been in that direction.
There we go. Okay, so at this point, what you're looking for is your confluence, and so we've started with the daily. We've got the general sense of what we're looking at in terms of direction. So where do we go from there? What are we looking at from there?
So once we, find our areas, well, once we find our trend, I should say, that's when we try to find our zones, whether you trade supply and demand, ICT concepts, they have things like order blocks and breaker blocks.
Mhm.
Me personally, I like to use supply and demand when it comes to 15-minute time frames and higher. I'll
Mhm.
use ICT style, maybe a breaker block, maybe a fair value gap on the 15-minute and lower. And the reason for that is just based off of the 5 years of experience I do have in the market, has been a lot more successful trading that supply and demand.
Got it. Okay. So, sorry, I'm getting beeped over here. My apologies. It's distracting. All
That's all
right.
right.
So we've broken it down. We're now looking at the 15-minute, and what I'm clearly seeing is a demand zone here
Yep.
that was created on the 15-minute. It looks like it tapped in and shot right off of it, just like what you taught me, just like what we've been talking about. So when we look at a situation like this, I'm not sure what time that was. I believe that was the middle of the night, but we created obviously a fair value gap just coming out of that demand zone. So where are we going from here?
So I wouldn't really look for a fair value gap formed overnight because a lot of times those don't really have the best structure. And especially because if we do look at this fair value gap, this one, example wise, it was already ran through. So what I
Right.
would look for is using supply and demand. I would look for a pivot near a demand zone, just like
Okay.
we have right here that from 3 o'clock in the morning, we had some sell side liquidity. If we come down to the 5 minute, which was very choppy today, right? It was
Mhm.
difficult going long, it was difficult going short. There are tons of lower wicks, there are tons of upper wicks, making it very difficult to trade on a 5 minute and 15. You would probably need to look for an entry on the 1 minute.
Okay.
So now that I have, my thesis, I see that we're ranging, I see that we're choppy. I would say, okay, well, clearly bears are keep trying here and failing. See,
Mhm.
buyers are keep trying to bring us above. Every time we tried to make a new high, we rejected it. We tried to break the high right here, we rejected it. And then we finally started to fail. However, we're yet again trying to make new higher lows. Buyers are again coming in, and that is because of that daily trend, right? We
Right.
have to be aware of that daily trend. The daily time frame trend will always be much stronger than a 5 minute, a 15 minute. So that's why we do have to be aware of it. However, in the morning, we did notice some bearish price action on the 1 hour, just like I taught you with supply and demand.
Mhm.
You look for a small green basing candle like this with a long upper wick to have a sell off candle just like this one right here.
Right.
Now, what do we have on this new 1 hour candle, the 11 o'clock? We had a strong pullback. So anybody who's stuck on the 5 minute chart might see these candles and go, oh, I have to go long here. Buyers are stepping in. They're stuck on a lower time frame. And what happens, they keep trying to chase it and they wick lower. Keep trying to chase it, we wick lower. It's a very difficult counter trend situation because now we're looking at a bearish hourly, but a bullish daily. So it's sort of hard. Once we have a bit of counter trends, right, on a lower
Mhm.
and higher, we have to be careful with that because a lot of times the bear trends won't play out good because the higher time frame is bullish or vice versa.
Right. Well, one other thing that we're looking at here, of course, we're sitting here at all-time highs on the Nasdaq.
That's right.
So what that means is, at least for the way that you've taught me, there's not a lot of information above where we are. So we don't have any supply zones up there. We don't have any sort of pivot points beyond that, of course, all-time high, which we just hit again this morning, if I'm not mistaken. I haven't looked at the chart in a week, so if I'm off, I'm off. But
Nope, you're right.
the point, in fact, I remember looking at that on my analysis. So when we start looking at situations like this, yes, we know that we're going to have some resistance. We know we're going to have some pushback on making those new higher highs because they're all-time highs. And when we are trying to trade into something like that, are you going to stay away from those highs as opposed to, are you going to wait for it to
Yep.
return back? So try to find a long back into it versus trying to trade off of it as it's coming down.
Exactly. So the much safer way to trade all-time highs is, of course, to wait for a pullback. Now,
Mhm.
if it's an intraday pullback, if we created a fair value gap to enter, if we created a order block, a demand zone, something bullish to tell me, okay, we're hitting this zone, we're hitting the sell side liquidity right here, right above a demand zone,
Right.
something to give me that confirmation that, okay, we're back on track on the correct trend, which is the higher time frame. Let me take it from here. But yeah, when it comes to the history of the market, you're absolutely right. There's no history. We can't go off of any old zones, any old levels. I mean, the 20,000 mark was new to the NASDAQ, and now we're all the way up to 20,600.
Right.
So this is very new to the market, very new to the NASDAQ. So
Mhm.
yeah, I'd only be able to mark out maybe buy side liquidity to the upside. So I'd really be looking at those higher time frames to sort of get an idea of when and where we're going to create a potential new supply zone for a pullback.
Got it. So at this point, once you start to see all of these things, once you have all of this information to work from, what ultimately means an entry for you? What are you actually looking for on the charts to say? Because, like, a lot of people have a ton of indicators. We don't really have indicators on here. We have stuff that you've marked up. So what actually, like, we have no red light, green light.
Right.
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 So what tells you I'm in?
Yeah, so that's a great question. A lot of times people, trade supply and demand, they'll just get in. I'm going to go long at demand, I'm going to sell at supply.
Right.
And that's great, but it's not going to obviously hit all the time. It might hit 50, 60% depending on the market.
Mhm.
Me personally, I want to know, are we breaking supply zones? Are we breaking demand zones? Oh, what I just press? We'll bring it back. There we go.
That's something. There you go.
Sorry about that. But what I'm looking for entry-wise is I'm looking for some type of liquidity, resting liquidity, whether it's a fair value gap that wasn't used, a sell-side liquidity, a buy-side liquidity. An optimal trade entry is also a fantastic entry point. That is the 61 to 78% on the Fibonacci. That is
Right.
great for pullbacks after we get an initial move. And just using those along with the thesis, the analysis of supply and demand. So if I'm seeing we're bullish due to demand zones being formed, I'm going to be bullish, looking for bullish fair value gaps to form.
Right.
I'm going to look for sell side liquidity to be swept to go long. So using hand in hand those two things along with the rest, risk management and so on, we're able to really not dull down our trading, but really simplify it and really, like you would say, you got to make it. What would you say? You got to make trading very. What would you call it?
Systematic is what I'm
Systematic.
always looking for. That's what
That's
I want
right.
it. I don't want it to be subjective. I want it to be objective,
Yep.
because this gives me an opportunity to back test, which is
That's right.
actually something I was talking about on my podcast. I found an interesting concept. Some dude said, hey, this thing's got a 77% win rate. I watched a 15-minute video and I back tested it because it was super, super objective. It was a garbage strategy, but over time, it eked out a profit, which I found really interesting, that it's not necessarily about having the absolute best strategy. It's about having that absolute consistency.
That's right.
Which way more meaningful, as you and I have talked about on multiple occasions.
That's right. Absolutely. Absolutely. Because consistency is key. And when it comes to trading, we want to do something that we could repeat.
Right.
Repeatability is huge. We don't want to win a trade and go, oh, awesome, I won this trade. Wonder why it worked in my favor. No, there has to be reason behind it, or else you're never going to go anywhere in your trading journey. You have to be able to journal your wins, journal your losses, figure out what's working and what isn't working.
Awesome. Awesome. Well, let's take a look. Did you take any trades today?
Today was a bit choppy. I did end up taking a few, which are live on the Bullish Bears YouTube if anybody wanted to check it out. But it was extremely choppy today, right? So we were
Right.
watching the highs. The highs kept getting rejected. So we were looking for some short setups. So we ended up taking this fair value gap right up here, short. So this was a pretty solid trade. I ended up getting out. My initial target was this demand zone. So I'll show you the exactly what we were working with. So we had our optimal trade entry as well. So from this move, from this high to this low, where we swept this previous high to where we swept that previous low. So I'm going to mark that out as my optimal trade entry with my Fibonacci tool. And I'm going to look for that 78%. That 78% fell right in that fair value gap.
Okay.
So once I had my entry, my target was this demand zone, making it about a 9-to-1 risk to reward, which is great. your favorite. Good risk to reward is
Right.
always the way to go. However, because every time bears stepped in, they failed. Bears stepped in, they failed. At this point in the day, once we got this impulse move below these lows, I
Mhm.
like to really do my analysis when I'm intraday trading based off of recent pivots. So
Sure.
I was watching these pivots. I wanted them to break. I was looking at Bookmap as well. I saw there
Mhm.
was very heavy selling above this fair value gap, and I knew that sellers would want to try to keep price lower for the time being. So
Sure.
we took this short and I ended up scaling out around over here. I do think that brings it to about a 4-to-1 risk to reward. Still a great risk to reward. Wasn't a 9-to-1, but you got to acknowledge and realize when you have to cut your winners short, which should not be often.
Right.
But if you're counter trend trading, you have to realize, okay, well, bears have been failing. Each time we try to push lower, we pull back, push lower, pull back. I want to be in this trade. I had a good entry. I had a good stop loss placement, and
Mhm.
even 4-to-1, great risk to reward. I'm going to cut it here because I know there is at any point the market can reverse.
Right.
I was watching even this pivot right here. It was in 4 NQ contracts, so I ended up scaling out of 2 about
Mhm.
right here, and I think I got out of another one when this candle closed and another one at this pivot. It
There you
was on the live stream if anybody wants to check it out.
I highly encourage you guys to check it out. I actually talked on the show a few weeks ago about how I was in a trade and I chickened out. I just straight up chickened out. And then, of course, what did it end up doing? I mean, like I got out for a small profit, but it ended up, it pulled back and then it continued my way. I should have, let it go all the way. And then literally the next day, I had another entry where it started to pull back, and I thought, no, I'm not going to chicken out. I just did this yesterday, and I paid the price for it, and it came back and took out my stop. So what we're seeing is not a strategic error; it's a lack of consistency, and ultimately, if you're going to pull out of a trade, there has to be a systematic reason, not just because you got scared. And so for me, that was definitely one of the things that I had been working on and trying to develop more of a defined rule for I'm going to get out early when it does this. And
Right.
so still working through some of that, but that really helps in terms of saying, okay, I'm seeing this wick. I'm seeing this failure on this, these downward runs, that logically there has to be that point where it's like, okay, this isn't just a pullback, this is rejection. And that's where we need to take a look at, basically getting out of the trade. So man, I appreciate that. That quite frankly helps a lot. Now, you talk about Bullish Bears. Now, people can just find you on YouTube on the Bullish Bears channel, right?
Yep. You could YouTube Bullish Bears. You could Google search Bullish Bears. It is a Discord community as well. But that comes with if you buy a membership, a monthly, yearly, or lifetime. But yeah, what you get is you get a live trader every morning from 9:30 to 11. It's either me or a handful of the other traders in the community. And there's also a streamer in the afternoons as well for Power Hour, 2 days a week, sometimes 3 days a week.
That's awesome. Now, I do know that actually on the YouTube channel, you post strategic videos, these little 5 to 15 minute little snippets. And quite frankly, I love those because I actually know for a fact that I have been the inspiration for a few of those,
Oh,
including the one that you just put up last week. Maybe not the
which
inspiration,
one?
but you and I had a conversation leading into what becomes now a video, and boom, there it is on Bullish Bears. So there's some phenomenal content on there. And again, this has been really, really impactful on my growth and development as a trader. And I know that for me, one of the big challenges, of course, my reactiveness, in my mindset has always been the struggle for me. Everybody knows my history. It's, it was a well-told story. But for me, I was not able to start to get past some of those issues until I had the confidence that came from having a solid strategy and a reason behind everything that I was doing in trading. Prior to working with you, most of my trading really revolved around some basic pattern recognition and just blindly entering, not really understanding what was going on behind that. And so by taking the time to watch a lot of the videos that you've put up, doing our one-on-one calls that we've done, now all of a sudden, there's a confidence. And in that confidence comes the ability to say, okay, I had a rough day today, but I'm stopping so that I can come back again tomorrow, versus I have to fix what I just broke. And that's not the case. You can never win every trade as a trader. I'm a big fan of Mark Douglas, and one of the things that he said that just always blown my mind is the reason that you took the trade is not the reason that it went in your favor. The two and most likely have nothing to do with one another. However, you can recognize that there's repeated patterns in the market over and over and over again, but you don't know if some farmer basically took a hedge on their big crop for the next year or whatever the case may be. We just don't know ultimately what moves the market. So we can't be bound to being right and wrong. We're going to be wrong. I still struggle with this to this day. Today was a good example of that. But I'm out of practice, and I recognize that, being on the show with you today is probably going to be helpful to me, hopefully, as it's been for everybody else watching the show. So, man, I appreciate you just taking the time and sharing some of the stuff that you and I have talked about, and taking a look at, not just the markets today, but looking at kind of that, how you go about prepping and seeing what it is that you have taught me to see, so that we can make better decisions and have some confidence in them.
Absolutely. Absolutely, man. Thank you for having me on. And guys, don't forget again, bullishbears.com. Check us out.
Bullishbears.com, YouTube at Bullish Bears. Check them out. Well worth it. I can personally attest to that. I don't promote things that I don't love and believe in 100%. And Kevin is definitely one of those that I do.
Thank you.
Well worth the time and energy and the investment in myself through him. So anyway, just a heads up, folks, I will not be here again next week. This is kind of a month of travel. Unfortunately, a few things kind of got mashed together in a short period of time, but we will be having a show. Cameron from Apex Trader Funding will be hosting the show next week. So we will have a show. It should be a lot of fun. Get a little bit of a different vibe, a different feel for the show next week. And then I will be back in 2 weeks with yet another guest, a guy that I've had a few interviews with at this point. Great guy. Is going to have some great information to share with you guys as well. So don't miss that. Last couple of minutes here, you've got the form on there, so don't forget to fill out that form to get your chance at winning one of the 3 evaluations. Again, at every show, we give away 3 Apex Trader Funding evaluations to lucky winners if you fill out the form during the show. So make sure you get that done. You'll be getting an email with all of that information if you are one of the winners by the end of the week. So just keep an eye out for that as well. Other than that, it's so good to be back. I hate that I have another break, that I get to miss you guys for another couple of weeks, but I'll see you guys in 2 weeks. But do not miss next week's episode with Cameron from Apex Trader Funding. He's got some great stuff for you guys, and I'm looking forward to it. So thanks for hanging out with us today. Marzidi. Oh, gosh. Okay, I need my glasses on for this. Marzidi, yes, thank you so much. I think it was a phenomenal show. Thanks to Kevin. Hopefully we've had a lot of fun with this, learned a lot. It's what we keep trying to do, and make sure that you take full advantage of all of the promotions going on at Apex Trader Funding right now. 80% off evaluations and 1 day to pass. So if you don't like waiting for the 7-day period, right now is a great opportunity to push it. And 1 day to pass, use promo code Benzinga at apextraderfunding.com. That's it for us today. I appreciate you guys. It's been a wonderful show. Kevin, always a pleasure, my man.
Yes, sir. You know it. Good talking to you. Good talking to you, everybody.
Thank you, guys. I'll see y'all in 2 weeks. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern. Dude, that was awesome. Yeah, that was fantastic, man. That was exactly